give you more insight into how to play the markets right now? Well, we're joined by Dharmesh Shah, who's the head technicals ICICI Direct, joining us now. Hi, Dharmesh. Good afternoon to you. Thank you so much for taking the time out and joining us. Dharmesh, quickly then, this is the fourth consecutive session where we are pretty range bound on the Nifty. In fact, today we even broke down below the psychological support levels of 22,800. Tell us from here on, what are the levels that you're watching out for next week?
Yeah, hi, good afternoon. Yes, definitely. I think so. I think so. If you look at the market for last 5 to 6 trading sessions, we have been trading in this range of 23,000 to 22,800. So almost 200 to 300 points trading range has been. Now, the point is that if you look at the trading range, I think so it's getting more of a contracting. I think so the range is getting more and more narrow. We believe I think so 22,800 remains to be the very strong support for the Nifty. Anyhow, if it breach these levels, we can see some bit of a panic selling on the cruising basis. Maybe 22,600 remains to be the very strong support for the Nifty. But eventually, for the next week, we believe I think so. Technical pullback is on cards. If you look at the market breadth, again, this is a good indicator, sentimental indicator to understand how the things pan out going forward. The percentage of the stocks of total 200-day moving average of total CNX 500 is currently is around 12% to 13%. So whenever the percentage approach to a reading of 12 to 13% of the stocks are just trading about 200-day moving average of total CNX 500, there are six occasions in last 2 decades wherever such occasions have been panned out. Market has formed a durable bottom during those phases. So we believe I think so we are not near the bottom, but maybe I think so short term, maybe I think so we are near the bottom of 22,800 to 22,600, and we are expecting a pullback for the next week towards 23,300 to 23,500. So buy the dip should be the strategy going forward.
At least in the short term, you can expect the bottom is in place, and 23,600 is something that could be likely when it comes to Nifty 50. Hi there, mate. This is Shrishti also joining in. But in this pullback, which sectors can actually participate? Any sector that is standing out for you?
Yeah, hi, Srishti. Definitely, I think so. If you look at the Nifty, I think so. Bank Nifty is something which has been relatively outperforming. No doubt, in current corrective phase, we are seeing a drawdown in the Bank Nifty, but 48,000 to 47,700 remains to be the very strong support for Bank Nifty. And banking is one sector which should lead the rally going forward because Bank Nifty contributes 35% of the weightage to the Nifty. So apart from banking, again, PSU as a sector, we have seen a good sell-off in last almost the index level around 25 to 26%. But inside the PSU now, power space has been one which has been seen a regaining a momentum in last few trading sessions. So stocks like NTPC or JSW Energy should be back in action. Apart from that power space, again, metal as a space clearly relatively outperforming even in this corrective phase. So metal as a sector will remain to be positive for going forward. So across, I will say that the buy we will see a more of a short covering happening. So maybe real estate, infra, capital goods. I think so. These are the space we are expecting a pullback happening in the next week.
Right. Dharmesh, also tell us about the broader market. Now, up until yesterday, for the two sessions, we saw broader markets outperforming the benchmarks. And today also, we were outperforming, but mid-cap has slowed down that pace. But any signs of reversal coming in on the broader markets? Because there's been a fair bit of correction that has happened there.
Yeah, so just want to share with you the data. If you look at the history of the mid caps and the small caps, so inside the bull market, corrections are part and parcel. So if you go back to the history for last 2 decades, inside the bull market, mid caps and small cap has a tendency to correct on an average around 25 to 30%. If you look and post that, we have seen a very decent pullback happening in both the indices. If you look at the current context, I think the correction which has happened in the mid cap and the small cap. In mid cap, we are done with 21%, in the small cap, we are around 24%. So maybe I think so 3 to 4% corrections cannot be ruled out in the mid caps and the small cap. But if you look at the historical data, maybe price wise, risk reward looks more favorable at the current levels. And maybe we may see a more of a bottoming out formation for the mid caps and the small caps, and can be seeing a rally in next 3 months for the mid caps and the small caps. So looking at the historical data, it suggests, I think so, maybe the downside may be limited from the current levels. And we are expecting, I think so, more of a base formation in the mid caps and small cap. So my suggestion to you is that look at the good quality stocks in the mid caps and the small caps. It's a good time to accumulate and construct the portfolio at the current market price.
Dharmesh, with this, we'll let you go on that and really appreciate you taking the time out speaking with us and giving us a sense on what you make of the markets right now.